Hello and welcome to my channel. Today I will be talking about 5 trends in the housing market that will help you make sense of the market and, hopefully, a lot of money too. Watch till the end where I will talk about a bonus tip that will really make it easy to figure how to invest in the housing market. Forbes says that 2023 looks like to be a tepid season for the housing market of USA. But it is still a very profitable sector where you can seriously think about investing your money. Remember the old saying that you should buy when the market is down and sell when it is up. I will tell you the most important 6 things to consider before investing. Each of these 6 considerations is critical, so pay attention to all of them. Number 1. Understand market conditions. You need to know the local market, so try to get maximum possible information about the local real estate. You should ask questions like, how is the local economy performing and what effect does it have on the real estate in the area? Inquire about vacancy rates in different parts of the city. Analyze rental demand in your city or any targeted area. Look closely at the number of properties available for rent and the demand for rental properties. Too many properties available for rent and for a long time indicates less demand. Majority of the properties appearing on rental lists getting rented in shorter time is one indication of high demand. CNBC reported that home prices are hitting new highs as high rates put a squeeze on supply. Also look out for property values. How have the property values performed or fluctuated over the past quarter or during the whole year? How would you compare the property values of current year with those of the last year? Basically, you need to stay fully informed about major indicators so that you are able to see potential opportunities and risks. Number 2. Conduct thorough due diligence. Due diligence may seem too technical a phrase and thus scary, but you don't need to worry. I will tell you some very basic and simple things that can create due diligence on your part. Once you have done these things, you can feel confident that you have done your part. Due diligence simply means thorough research and investigation of the property that you are interested in. You need to carry out these 4 steps. Step 1. Get property inspection done. Nothing will tell you more about the property than the property itself, so you need to look at it in detail. Step 2. Estimation of structural issues. Detailed inspection will reveal need for addressing any structural issues with the property. You will get a fair estimation of the money you will have to spend to solve these issues. And that gives you a fair idea about costs and potential profits before investing in that property. Step 3. Review title history of the property. Who has owned it over the past and for how long? This factor will tell you the history of the property and will indicate if there is a problem in the title. Step 4. Potential legal issues. Problem with the title or otherwise with the documents can tell you about any potential legal problem. Have a look at the documents and get a lawyer to review them in detail, because only a lawyer can tell you about loopholes in documents and potential legal problems. Number 3. Location research. Third consideration would be the location of the property. Be very sure that it's not just the property but also the location of the property that matters a lot. It matters because it has the potential to have a positive as well as negative effect on the value of any property. Fortune magazine notes that the expected bearish trend in the housing market for 2023 did not come true, and local conditions also played a part. The kind of neighborhood the property has matters a lot. What kind of amenities are available in the neighborhood? How close it is to schools? How convenient it is to access transportation from that property? And even more important would be the crime rate of that particular area. High crime rate means lesser chances of growth. All these factors determine positive prospects of a property. So, gather this information and then decide about investing in a particular property. Number 4. Financial considerations. What will be the return on investment? The return on investment, also known as ROI, needs to be carefully calculated. Just like due diligence, it is technical and scary for many persons. What I will do today for you is to help you with basics of return on investment. Let's start with calculating a 5 years term. Sum up the total investment that you are going to make and the cost till you acquire the property. Some restructuring, legal fee and other expenses can be part of the initial costs. Once done, now calculate other recurring expenses for your property. These will include property tax, insurance cost, maintenance costs, and financing costs. Also calculate the income from the property. Compare annual income with the annual costs. And here you have the potential profit. Add in the annual market growth rate and you will get to know likely profit that you will make off this property. Cash flow potential of the property needs to align with your investment goal. What are you investing for? Short-term or long-term benefit? Complete this whole exercise of financial considerations and you will have your answer. Don't forget to add the costs of regulatory requirements for your property. Number 5. Planning property management. Who will manage the property? Are you going to do it yourself or you are going to hire a professional company? Consider this in detail when you make a decision to buy a property for investment's sake. There are certain responsibilities and challenges that you will face as a landlord. You alone will be the one facing all of it. Do you think you can do this? Do you have enough knowledge, and do you have the time to spare to address all the challenges? If answer to any of the above questions is a no, then you probably should not be doing it yourself. The next best solution is to hire a property management company. They will handle tenant issues, collect rent, and ensure timely maintenance of your property. You can agree upon a schedule of information sharing and you will receive all the needed information about your property accordingly. Another benefit of hiring a professional property management company will be that you are going to have time to explore more investment opportunities and work on diversification of your investment portfolio. Bonus: consult for professional assistance. This is a bonus tip that I use a lot and it has really made a difference for me. Always consult a professional for advice. And listen to what they have to say with an open mind. Never feel shy in approaching a professional for advice. These experts can be real estate agents, property managers, and lawyers. They can help you with negotiations, solving legal problems, and making informed decisions regarding investments. It is your money that's important and you need to be very cautious while deciding on investment avenue. So, do your research properly, consider the financial aspects, plan for property management, and seek advice of a local professional to fill in any gaps of information or expertise.